Right, that's excellent. As I said, 3 people pitching, panel of judges, they'll ask the questions. Very simple rules. 5 minutes for the pitch and off the stage. 5 minutes of questions, off the stage. So quite quick and simple and very easy. Before we start though, it is my real pleasure to introduce an old friend and work colleague, Darren Powell, VP of Fintech Business Development at Mastercard, for a few comments. Darren.
Thanks a lot, David. I will try not to go anywhere near 5 minutes. Look, it's a real pleasure. First of all, being here today, seeing so many people. Isn't it brilliant to be back in a physical world, being able to see, speak, and engage in genuine conversation, meaningful, valuable conversations. So it's great to see you all, and thanks for sticking with us as well. I think it's also important to have a bit of a quick shout out to the Payments Association and to all the sponsors and to you guys on stage and you guys who are soon going to be on stage. I mean, this is the bit that for me is what we're all so passionate about in this vertical. It's making things happen through partnership, with purpose, with impact, and it's genuinely about that collaboration. I think this isn't about hearing from Mastercard what we do, what we don't do. This is about being a technology first, innovation first, digital first, not necessarily digital only, absolutely not. But it is about the power of that ecosystem and that value chain. And hopefully, what you're going to hear from today are some of the fascinating fintechs that are out there. And there are so many. And ultimately, that's the bit that I love so much, because we're able to, me, my team, wider Mastercard, we're able to engage with everybody. We're not experts per se. We know a little about a lot. And we've genuinely been able to go on a journey with so many, some of these guys, some of you guys out there. And it's a genuine pleasure and privilege to do so. So I guess one thing just to talk about real quick, and it's the value of Mastercard developers and Mastercard Start Path. Again, we've talked a little bit about tech first, innovation, partnership, how we do things, how we make things happen, how we can put ecosystems together, deliver value chains and deliver value, reciprocal mutual value across our industry. So we're going to hear from some fascinating guys, some I know quite well, some that I've seen and follow, as we all do, I'm sure, on LinkedIn. So I want to wish them all the best. And on that note, we're going to talk about innovation, bleeding edge, and that's what Mastercard continues to do, does today, and will continue to do so tomorrow. So pleasure, good luck. Judges, Mr. Parker, over to you.
Thank you very much, sir. So our first pitch, please get that timer set to 5 minutes, thank you, is Money Suite. The floor is yours, sir.
It's a pleasure to stand before you all and present our Fintechs SaaS platform for digital billing and payment processing. What we have essentially done is we have productized digital billing and payment processing as a SaaS platform. Now any business can subscribe to our service and they will get all the capabilities without any technical effort. The problem what we are solving here is previously to get the same level of capability what we now offer out of the box, the business has to spend a lot of time and money, and it is complex. The larger business were able to do it, however, micro and smaller business were left out. They either lived with a very minimal capability or no capability at all. All their payment processing steps are manual, which is error prone, and they spend a lot of time and effort in payment collection activities. And the solution, the Money Suite. How we design the whole product is for a market ask. We talked with a lot of businesses, understood their payment processing requirements and mainly their pain points. And we are delighted to say we have a live service now in UK which addresses all their needs. Money Suite is an end-to-end comprehensive billing and payment processing system. It's the only platform that supports all major payment types, such as card payments, direct debits, wallets, and open banking payments as part of a single service. In addition to this, Money Suite offers significant advantages when it compares to any other services. So what's the advantages? We simplify the whole processes. Now the business staff does not need to have any payments knowledge or technical knowledge. They can create any type of billing in just few minutes. The next advantage is commission savings. With our instant settlement bank payment, they can save up to 75% of their commissions. In addition to this, all our subscription comes with at least 25 no commission bank payments. Moving on to time saving. We understood businesses' end-to-end payment processing steps, and we have automated that. Now the business could save at least 50% of their time in payment collection activities. And finally, the security. With Money Suite, the business doesn't have to get payment credential directly from the customers or through the phone. It all happens through our integrated secure channel. In this way, end customers are secured and the business are compliant with the regulatory rules. Market opportunity. We have an entire suite of APIs for larger businesses to automate their billing and payment processing. However, we are more focused on micro and smaller businesses. The reason is they don't have any proper alternative. It's a huge market. There are around 500 million micro and smaller businesses with a total addressable market of around $400 billion. Our target and go-to-market channels. We target to be with 100,000 businesses in 3 to 5 years and in millions in 10 years. To reach to this type of numbers, we cannot just rely on the paid channels. At Money Suite, we'll create a community for micro and small businesses, and we'll be very active with this community, providing them with advisors, free tools, and information. And we believe this community will bring most of our customers from mid to long term. And the next channel we are focusing on is partnerships. We'll be partnering with banks, accountancy firms, and enterprise software companies so that we can distribute our best billing softwares to the SMB customers. And lastly, our company. I'm a technical founder. We have a great, passionate team based in London. It's been a year we started it, and we are proud of what we have achieved. We have stayed focused. We have been true to our mission. Now we have a live service in UK, which works for all type of businesses. We'll be taking the same service to other regions like Europe and the US. With this, I complete my pitch. And thanks all for listening. And I'm happy to take your questions.
Thank you very much. Stay here. Right, judges, over to you. Questions? It's on? It's on?
It's on? Okay.
Yeah.
Thanks very much for that. It was a really interesting pitch and a very impressive platform that you built. But can you ask, I mean, your platform sounds like it does a lot of things, bookkeeping, invoicing. I was just having a look at your website just before I came on. What do you see as being the key differentiator? Like, what makes your product a must-have for your target customer?
How we designed it. We do not take a technology to a market. We did the other way around. Technology is our comfort zone. We talked with lots of businesses, and we have done everything what they need. So it's how we approach the problem. I believe Money Suite is a must-have to all the businesses. It's how we approach the problem. It's a comprehensive end-to-end billing system.
Maybe just a question from my side, kind of piggybacking on that. We've seen quite a few, I guess to Kevin's point, it's like there are quite a few different like product lines individually that you could almost build like individual businesses on. So from my understanding, you have kind of like payment-enabled invoices, you have the subscriptions, you have kind of like inbuilt customer messaging and so on. Are you seeing that some of the customers you've got now are using any other like almost best-in-class verticalized solutions for any of those specific products? Or is it that you're actually getting them to transition from kind of nothing at all in the first place?
They are transitioning. My customers till now is, I had 10 beta customers who are my friends and my business accountants. Since we go on live last week, I got 6 customers. There are various type of customers, from a software company to a taxi company to a GP. They are all using the product. And they're not just using invoices. That's the problem with other software. They support very vanilla software. Whereas Money Suite, it's like a CR, what Salesforce did for CR. It's a complete solution on a subscription basis.
Got it, thanks.
Yeah, so you said you had a beta in recent weeks, right? You have your initial customers. Can you unpack your go-to-market a little bit more? The types of customers you're targeting, how you're targeting them?
The type of customers I'm focusing on, until I get my resources well, I will not focusing on larger enterprises. It does take a lot of our time. We'll be focusing on micro and smaller customers. We want to grow more in numbers. The main thing I would focus the technical energy of the company is building the community and also working with the partners. The banks has to see a value that this is the best billing and payments platform, and they would like to provide it to their customers. So building these partnerships and the community is what I see as a long-term objective of my company.
Yeah, I guess, following on from that, it'd be good to know a bit more, whistle-stop tour of yourself, your team, why you're the right team to be solving this. If you're targeting small businesses, this is quite a saturated market. And even small businesses sometimes can have long sales cycles because, founders treat their companies like empires, right? So who in the team is responsible for this outreach? Why are you guys the right team to be solving this?
I'm a technical founder. I had a payments background, and we are passionate about this whole providing to everybody is our mission. Other than me, I'm a good geek. Other than me, there are 2 other engineers. I take care of the market, understanding the market, for talking with the businesses, designing the products, and there are 2 other engineers, Shanmu, Priya, and Anita, and they are working on the product, and we got live with them. It's a really good product. And we will be expanding our teams so that we add what we don't have, what other competency we don't have, we keep adding to our team.
Final question?
Yeah. So you described yourself as a subscription business, right? Can you just talk a little bit more about the business model itself?
Yeah, sure. What is our revenue model is, it has a subscription plus a transaction. Each subscription comes with free payments. Then if they pass that, there is a transaction fee. And also, based on what I learn, it might be a free subscription as well. We'll call it a usage-based tier, and we'll give it that way. So it is a subscription model, but very similar to the regular enterprise softwares. We will have a free model, which is a usage-based pricing. And the ARR, annual recurring revenue, works out to be $700 per business, an average.
Wonderful, and that's time, I'm afraid. Thank you very much.
Thank you.
Thank you. Right, I'm going to swap my judges over. I ask for Bruce, David, and Alison on stage as judging team. Sorry, judges off. That's it. And we have AppTap up on stage, please. My judges are seated. AppTap is on stage. Nearly. And as soon as you open your mouth, the clock starts.
Just going to hobble up on here. Thanks for listening. So I'm Will, one of the 3 co-founders of AppTap. Is my deck going to come on? Do I get a deck up? Okay, sorry about that. Yeah, so Will, one of the 3 co-founders of AppTap, where we're trying to help consumers save thousands of pounds on their bills and subscriptions every year by helping banks connect with merchants. Oh, we have Android emojis instead. So banks are struggling to connect with merchants today, and that's largely due to costly, bespoke technical integrations with one another. It's due to hurdles and challenges around risk and compliance, and more generally, it's just the fact that servicing products and services to customers is a difficult thing to do. But banks do hold that consumer trust. And in their battle for market share with the likes of other fintechs, with challenger banks, with other financial institutions, they need to be engaging customers. They need to be retaining users through tools that are focused on the consumer well-being. They also need to be driving revenue, whether that's through commission or upselling services or more traditional products like lending. But on the other side of the table, we look at merchants. They're searching for optimized digital channels centered around engagement and retention as well. Shopify has found that over 53% of merchants worldwide are looking for ways in which they can sell their services and products anywhere at any time. And in the UK, Barclaycard has found that over a fifth of UK retailers have actually launched a subscription-based business model over the course of lockdown. But the current affiliate experience sucks. It's not centered around the consumer, it's centered around acquisition and user churn. What's happening today is that merchants are connecting with the likes of Google, with Facebook, with our dreaded price comparison websites, and they're sending product links to products over to them. Now, these channels are using their data, their siloed data sets, to essentially put digital ads in front of consumers, which means that a customer has to click on that ad and they get redirected off to a merchant website and have to restart that journey. This is Google, Facebook, price comparison websites optimizing digital ads based on cost per click or cost per acquisition, and they're not applying those data sets across the user journey, only to the ad itself. What that means is that consumers are lacking both clarity and control. So what's going on in my little ecosystem of bank accounts and bills and subscriptions, and what are the actions I can actually take, and when can I take them? At AppTap, we found that of those customers who have signed up and connected at least one bank account, almost 1 in 5 will actually go on to cancel services. We've actually saved customers over £10,000 by switching bills over the course of the last couple of months. On an average, I think it's around £250 is what a consumer could save yearly. What that boils down to is just poor UX is the reason they're not optimizing here. If I go on a price comparison website today, I won't say whose journey I went through to get these numbers. We see it's around 40 deals or products and services that they're faced with, and it takes around 35 to 40 clicks just to get to checkout. What AppTap is doing is aligning banks and merchants around that customer experience, around engagement, around retention, around revenue. Merchants and banks can interact with one another. They can build out user journeys that can be fully embedded through a fintech user experience. This is all API-based and data-driven. It's AppTap underpinning with financial, with usage, and with user input data that applies across that entire user journey, so the customer can take an action without ever leaving their banking app. What does that look like? A customer can connect any number of bank accounts into AppTap or our partners' platforms. And we'll pull out their bills and subscriptions, display them on a simple dashboard for them or a calendar, and even show them things like discretionary spend for the month. We can then say, here are the best deals on the market for you based on your user profile we've built, and allow the customer to take an action without ever leaving the platform. That's canceling, switching, signing up to services, but also things like customer support or accessing rewards and discounts that the merchant's offering. What this is all about is taking open banking and evolving that into open data. It's understanding how open banking-based payments, things like VRP, all the things we spoke about today, how they blend into this customer experience to optimize for consumers, for merchants, for banks. But also then, okay, I've just saved £250. Can I sweep my savings every month into an investment account, into a savings account, into a loan repayment, for example? So today we're working with the likes of TSB Bank and a handful of other fintechs and financial institutions to make this a reality. But we're also working with the UK's largest telecoms and utilities businesses to do so as well. Right now we're ingesting these product links from merchants, and we're essentially building out these bespoke journeys. But if you're a merchant or a bank, we'd love to chat to you about it. Thank you.
No, you stay here. We get some questions now from the judges. So I told you that was going to go off on time. Right, judges, 5 minutes, starting now.
All right, I've got a question, which is your business model. How do you bring revenue in? Where is it?
Yeah,
how do you
sure.
charge? All that good stuff.
So it's kind of twofold, right? The first being pretty standard API-based license fees. We work with financial institutions. We're working through the motions in terms of what that looks like for merchants as well. But we've kind of taken the approach of we're not quite ready to disrupt the affiliate business model today. We're building out this kind of version 1 layer. And as we move forward, we start to remove ourselves from like a commission-based model that we're playing around with today. So we're essentially getting commission from utilities, from telecoms merchants every time we switch or sign someone up to their service. The same way a price comparison website is, after just flogging them for a second. But it's about fundamentally disrupting that affiliate model and being able to connect the channel partner with the merchant themselves to a point where we can almost remove ourselves, become this infrastructure layer and say, let that flow through. Can that even flow through to the customer? There's some work we've done recently with Citizens Advice Scotland and working with a charity at the moment actually to try and push that commission through to a consumer. Can they donate that, for example?
Thanks, Will. That was really interesting, and love the customer focus as well that comes through in that. This is really a network business, right? You talked about the connectivity there. How are you going to grow that when one side needs the other side? Where are you going to focus on first?
It's the classic startup chicken and egg, isn't it? We started on the merchant side. I think, for lack of a better word, it was easier than going to a large financial institution saying, hey, we have no merchants on board, like, work with us. Because we could always put a consumer-facing proposition in front of people. We're at a point now where we have propositions through partners, and it makes that, obviously, that merchant conversation a little bit easier. And so I think it's a natural progression on both sides, just taking one step at a time. I think fundamentally, though, as long as you're focused on the consumer, I can't remember who said it earlier in one of the talks, the fallout from that, or the bleed out in terms of value is going to, if you're optimizing for the consumer, it's going to bleed out into bank value, into merchant value as well. And so we focus on the customer and we say, if we can enhance that experience to here, are we going to hit a ceiling? And at what point do we need to improve the infrastructure for a merchant, for a bank, to push that ceiling higher and continue to improve the UX?
Thanks for your presentation. Interesting model. I'm interested in your route to market. You talked about using the partnership model, but also direct to consumer.
Yep.
Can you tell us a little bit more about your prioritization as a scale up?
Sure.
And in particular, how that route to market plays out going forwards?
Yeah, I think it's very difficult to go out to a financial institution or to a fintech business and say, we haven't tested this at all, but use our software. So the reason we've built out this consumer-facing proposition is to say, look, it works, and it's working every day with consumers who are, signing up, they're managing their bills, they're switching, they're, canceling services, whatever it is. So that's our consumer-facing piece, and actually we'll be launching mobile apps in the next month or so you can check it out on the App Store soon. Selfless plug, why not? But our B2B2C angle, as it were, our kind of infrastructure play is definitely our primary concern. I mean, maybe it's not a great word, our primary focus. And that allows us, right, to essentially say, well, hey, we work with TSB Bank at the moment. Hey, TSB, surface this to your 5 million digital customers. That's obviously beneficial for us, but then TSB can start to tap into the engagement that comes with that. Customers coming back week in, week out to manage their bills and subscriptions. To TSB to leverage the trust that comes with, hey, you're actually overspending on this thing, or you're constantly going over budget on X, Y, and Z, and not just leaving them hanging in the wind after that. It's, here are the actions you can take, and we're actually helping you take those. So the big part of our relationship with TSB, and credit to them to work with a smaller stage business, was around that kind of consumer confidence and money confidence.
Thank you.
If I can get one quickly. You mentioned you're targeting merchants first. At what stage do you feel you've reached scale? I mean, how many merchants, or have you sized the market for when scale looks like for you?
So we've basically got market coverage across utilities and telecoms at the moment. Next stops into insurance and financial products, essentially, for the sake of a quick answer.
Thank you.
Sure.
That's it. Thank you very much. Much appreciated. You managed to get TSB in there at least 5 times, and one of your judges was NatWest, so we'll see how your scoring goes. Right, I think we have a change of judge here. Yes, you're off, I'm afraid, and I have my final judge on the stage, please, which is Aurelia. And we have Osper on stage. Right. Clock starts now. Start talking.
Hi, everyone. I'm Tom from Osper. Cash is dying. Hopefully this isn't a surprise to anyone in this room, but all over the world, apart from Russia maybe, cash is dying. And that's a good thing for us, right? We're in the payments industry. And it's a good thing for consumers because payments happen faster and more conveniently and more securely. But unless we're careful, we're going to leave some people behind. In our push for digital payments, we risk isolating parts of society. Specifically, we're talking about children. We're talking about vulnerable and elderly adults. And we're talking about people who work in cash-only sectors. We've recently launched a solution for the second of those groups. It's called Clever. It's awesome. It's going to revolutionize spending for carers and people you care about. But today, I want to talk about the first group, young people. As we've established, children are growing up in a world without cash. Retailers don't accept coins and notes. most of the content children want to purchase, games, music, movies, all online. So our transition to a cashless economy risks leaving these children behind. And that's where OSPA comes in. So OSPA is a parent-managed debit card for young people. We're helping the next generation move from cash to digital payments. OSPA is a debit card for children aged 6 to 18. It's an app for their parents, and it's the platform and technology to make the program run. In the UK, we've issued 150,000 cards and have helped children spend and save more than £100 million of pocket money. And we have the most awesome cards you've ever seen in your life. Now, we're aware that OSPA isn't unique. There are other companies doing fantastic things in Western Europe, North America, Australia. But there's 100 other countries out there and 1 billion other children. And we believe that kids in Lahore should have the same tools and opportunities as kids in London. But building any type of card scheme, especially one for children, is really complicated. First, you have to develop a parent and child financial model where the parent owns and controls the account, but the child does the spending. Then you need to build an array of safety measures so that young people are protected. And of course, you need to make sure that the product is usable by children as young as 6. Things quickly get very complicated. What you're looking at here is the database record for one parent on our platform. OSPA is really lucky. We have an incredible development team, decades of experience in the industry, but even then, developing OSPA cost us millions of dollars and took 18 months. And that's a big ask for anyone who wants to replicate the model. And that's why we made Prosper. That's not looking great, but okay, carrying on. Prosper is OSPA in a box. Prosper means anyone, anywhere, can launch their own youth card scheme in weeks and for a fraction of the cost of building it yourself. It's everything you need to launch a youth card scheme. And when we say everything, we mean everything. It's apps for parents and children. It's a full sign-up and onboarding process. And it's all the back office functionality you need to run your company smoothly. In fact, all you really need is a name and a logo. Prosper provides everything else to connect your brand to your issuing bank. Startup costs are minimal. Build cost comes down to around $250,000, and the 18-month timeline drops to 12 weeks. Running costs are about $1 per child per month. Our target markets are existing banks who want to launch a youth card scheme but are held back by legacy technology. It's fintech startups and entrepreneurs who want to launch a youth card scheme or add one to their product. And it's consumer brands who want to capitalize on their existing family audience. Banks get a dedicated youth card platform which doesn't depend on existing technology, in-house resources, development teams. Prosper can be integrated into your platform, or it can be run as a standalone stack. It's completely up to you. For startups, Prosper means there's no need to hire a development team and no need to write a single line of code. Prosper allows the business to focus on what they do best, growing, while Prosper handles the technical side. And brands get a new income stream, fantastic source of consumer data, and a new tool to drive loyalty and retention. There's a good example of Verizon doing a similar thing in the US recently. We would love to do a similar partnership with a European mobile operator. There's very little competition to Prosper right now. Existing banking as a service providers don't come close to our feature set, and the alternative, building it in-house, is a huge and expensive task. So there's a massive first mover advantage for Prosper. Our target is to get cards into the hands of 5 million children worldwide by the end of next year, and we'd love your help to achieve it. Thank you for your time.
Thank you. Over to the judges again.
Thanks.
Thanks a lot. First question, do you have any case studies or partners that you're already working with?
Probably the best example that we have is the longest standing partner that's operating on the Prosper platform, which is OSPA itself. And OSPA's been running on the same technology stack for years, no problems whatsoever. It's a battle-tested, trusted, proven platform. We have a bunch of partners that are in the process of, from early sales to launch, all over the world, from Latin America to the Middle East to Africa. In fact, we're getting so many projects in the Middle East that we've opened up an office recently out there. Can't talk about specifics, of course, because of confidentiality, hope you understand. What I will say is the response to Prosper has been incredible. I've never been part of a software as a service, as a B2B launch as this. People love the solution.
That was brilliant. Thank you very much for that presentation. Really enjoyed that. From a bank's perspective, why would a bank come to yourself? What can you offer that's different when you're offering that to everyone? And that's actually your business model, to offer that to everyone as well.
Yeah, absolutely. That's a good point. So 2 points to that question. Why do banks need or want an outsourced solution? And I guess the answer there is for many banks, you've got a product roadmap which has been set in stone for 3 years. You might have a huge technology team, but it's very difficult to get them onto agile, small side projects, which is why companies like us are able to come in, very specialist area, solve a problem for you in a very undercover, secret squirrel way where your clients never actually know it's not being built in-house. So it's a very powerful way of sidestepping internal bureaucracy, if you want to put it like that. So that's good. In terms of what we can offer, essentially the product is very customizable and very modular. So you don't have to take the whole technology stack. If you want to, for example, integrate the parent functionality into your own existing app, no problem at all. Likewise, if you'd rather just run it as a completely standalone stack, fine. So every client ends up being a bit different. Thank you.
Thanks for your pitch. Really interesting. I'm interested in particular in the pivot from OSPA to Prosper. I can absolutely see why that's a logical step. The challenge, of course, is scaling globally is a very different journey to, I think, the original OSPA journey. So I'm kind of interested in 2 things on that pivot. Number one, how you prioritize in terms of resourcing for the internationalization. And secondly, is there a revenue, in terms of your revenue model, how does it differ between the two different parts of the business now, which I understand coexist right now?
Absolutely, yes. So we still have our beautiful, wonderful UK B2C product, OSPA, and now we've got the B2C. In terms of resourcing, there are certain territories which are easier for us to move into than others. Certainly, obviously, our beautiful processing partners at GPS allow us to process across the whole of Europe without having to change a single setting in any dashboard. Also, a lot of processing in the Middle East is very easy for us to do as well. So in terms of where we're looking immediately, Europe, Middle East, North Africa are our initial priorities, simply because we don't have to recode any processing partners. That said, we do have a roadmap where we've got an African processing partner and potentially also a Latin America processing partner on stream and ready to go later this year. Second point of the question was, the financial model.
Revenue model.
Yeah, exactly. Actually, the revenue model, as it worked out, is actually quite similar to the consumer revenue model, where we charge a certain amount to a parent per child per month. In this way, we just charge the bank per child per month. So actually, the model works very, very similar ways. And of course, then it scales with growth as well.
Thank you.
Thanks.
If you don't mind, I know we've concentrated on the kids product. I was really quite interested in the elderly and carer product. Any kind of thoughts on where you might take that?
Yeah, absolutely. So Clever is this incredible program, clevercard.com. Go and check it out. If he can get a plug in, so can I. So yeah, it's a prepaid card for carers who spend on behalf of the people we love, and it's also for vulnerable adults as well who you want to monitor what they're spending and make sure it's not being they're not being ripped off or defrauded. So it's a very similar model to the OSPA model, where there's a parent and child relationship, but this way the child is a vulnerable person or an elderly person or a carer. It's going to revolutionize spending, and we're so proud of it. Wonderful.
Thank you very much.
Thank you.